Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn & Associates with your metals market update for this Tuesday, the 8th of January, 2019, about 2:15 p.m. Central Standard Time. So we've got a lot of information coming at traders now. First, you have a stronger dollar today. Not dramatically, but stronger. You've also got the euro getting hit because Germany saw its industrial production level slip way more than thought. They were looking for 0.3% gain. They got 1.9% decline. That's not very good. Tonight at 8 p.m. Central Standard Time, we get President Trump making his first Oval Office prepared commentary on the border wall. So that's going to be very different. Then we're going to hear the Democratic side come out on it. There's so much going on between trade and so on because our trade mission is still in China. It was supposed to be a 2-day meeting. It's gone into the 3rd day. That's never a bad sign. That's always a good sign. So let's take a look at what we've got right now. Gold has still had this $100 an ounce rally, and it's still holding that together. When we look at how the market's done on the chart, we had what I call this outside day. Let's come to that so you can see it. And the market has stayed within that so far. Hasn't broken out of that, did not make a run to get over the top of that. So now if the market gets through that, it is no longer, because you're through 2 days after that outside day, on my rule, I made this rule up, but I found it serves me well, it wouldn't be a bear trap anymore. It'd just be a market that's got that pattern. And with that pattern, when you look at it, you've got on the swing lines this constant pattern of higher lows and higher highs. You'd have to take out 1269.10 to break that pattern of higher lows. At this point, you're also getting, and you can see just how you finished today, the 18-day average has now gotten over that number. Now, we were wondering yesterday if it would, and it has. So on a pullback to that area, I wouldn't be surprised to see support in the market show up. Obviously, the ideal situation would be to not take out that number because you'd keep that bullish pattern and traders would talk about it. In terms of where the resistance came in, it's been pretty consistent at the upper Bollinger Band. But what was the giveaway and what's hurting the market is you lost the embedded slow stochastic reading. Now, let me explain that. SSTO, which are called slow stochastics, have two numbers that make it up. Red and the blue, called the K and the D line. When they're going sideways over 80 on multiple days, and I teach this in my charting course, that is said it's locked in, and its nature is it went from overbought and locked in a bull trend. If it's under 20, it locked in a bear trend. But what has happened here is you lost that reading. Unless it gets a good piece of information immediately, and I'm talking obviously between tonight and what the president says, I'll be looking to see if the market falls even further from that 78. Initially, it should. Then the question is, how does it react to the speech? Remember, the market's open at 5 p.m. Central Standard Time. The president speaks at 8 p.m. I don't know how the markets are going to react, any of them, to what he says. When we come to the GLD, the popular ETF, you still have the embedded reading. And the question is, where does the market close in today's range? What we've had is a pattern still of higher lows, but suddenly we got lower highs. Do you see that right there? So you're narrowing in like that as the market's in a pause. When we come to the GDX, the gold miners, this market double peaked at the upper Bollinger Bands, had a terrible day yesterday, overbought, and if it breaks, I would be looking for the 18-day average to be the first support. Look where the market went and where it held. So now what you've got is the swing line down because you have lower highs, lower lows. The market finished, or its last trade right now is 2104. I don't know where it's going to finish in the next hour, but as long as it stays above that, what it is the market's probably going to just fight at that number for a little bit. Momentum, because it's overbought, has to work itself down. How does it do that? Either consolidation or a price break. This is not a buy signal as I define a buy signal. In the gold-silver ratio, we're getting a little bit of a bounce where the gold's a little bit stronger than the silver. And when you come to the silver, the market is at 1569.5. It's been trading around 67 to 72 literally the whole morning. It still has the embedded reading. Certainly it can lose it tomorrow, but if the bulls want to hold on to this market, you want it to close in the top part of the day's range, and as you can see, it's there right now. 1570 is a heck of a lot closer to 1574.5 than the day's low at 1556. But it too is going to feel some pressure tonight as the market waits to see what the president says. In the copper market, you've got the pattern of lower highs, lower lows. Bearish. You have to take out 265.95 to negate that pattern. Let's assume that happens and you end this leg formally of the down cycle. It still doesn't turn up immediately because you'd have to close over the 18-day average to do that. You have some divergence. You've got momentum pointing up, and one of the things we talked about is when you have an embedded reading with both numbers, like here, let me see one of the numbers, in fact both are over 20, here they're both under 20, under 20, under 20. So I've got several days under 20. That's what you call a bearish embedded reading. But it all happened well under the Bollinger Band, which is always a bit dangerous. Then yesterday you get that turn in the market where you lose the embedded reading and you confirm it's lost again today. It cannot re-embed right away. The odds favor when that occurs, as you can see, here's today's action, that price and the 18-day average are going to try to make a run at each other. Does it always work? Nothing always works that I know. But the percentage play is that that's what the market will try. When we come to the platinum market, I mentioned yesterday that the market was having, it got up to the 100-day in the upper Bollinger Band, fighting a battle, overbought, and you can see what had been, I thought, resistance at the 100-day. You fell back as support yesterday and again today. The market's fighting a battle right at that number. But the fact that it's so overbought and the fact that you've got a lower low and a higher high, well, you have to get some piece of bull news to keep that going, like Palladium. And Palladium just keeps moving to all-time highs. I know I've been consistent in saying the problem here is probably between Russia, maybe cutting off palladium exports, South Africa. You've got these issues, and this has been a strong, heck of a strong market. And now we have, if we look at the slow stochastics, both numbers over 80 today, both over 80 the day before, not the day before that. Tomorrow's a very important day in this market. The odds favor it won't close over the 80s, the upper Bollinger Band, but we'll see. If it does, great for it. It is in an uptrend, but it's over that upper Bollinger Band a bit too much maybe. Dollar index. When you look at this, you don't need me to tell you that the combination of the lower Bollinger Band and the 100-day average is so far acting as a bit of support. Obviously, there's risks all over this because you tell me how the dollar is going to react to whatever the president says tonight. I have heard on people saying if he goes with the national emergency on the border and goes to fund it via that decree that he makes, that there'll be a legal fight and the market's not going to like it, the market will go down. I've heard the opposite. I have heard that that is his win-win position. Do that. You can fund the government. The people that should get a paycheck on Friday will get it. It's better for the economy. Which one of these is the right thing? That's what the market will tell us after he speaks. So I think you want to glue yourself tonight to what's going on and keep your eye on how these markets are going to respond, because I'm hearing all the experts talk. I think the president goes, just personally, why not go for the decree? See what the court's doing. Give the people their paychecks. I wrote my silver report, and so it's got an awful lot in it. It's mostly graphs this time, not a lot of writing, but I think I tell the story with the graphs. So if you'd like to see what it is, and you're going to get the seasonals in it, you're going to get a weekly and a daily chart in it. I'm pointing out something that I think is important. Doesn't mean it'll work, but what I didn't include this time is just my price count. We send that out anyways, but you're getting all the other parts of this as to what goes on. How do you get the report? And it's my first metal report of the year right now. So you get it by giving us a call, or you can go to our website and sign up to get it. Either one will work just fine. Take advantage of it. I'm Ira Epstein. You have a good day. Be glued to that TV tonight. Take care.